we're going to try and get a connection now with Stephen Sard, the CEO of Aspen Pharmacare, on the latest deal with Glaxo Smith Kine, which involves the rights to 25 products, and the cost of this deal is 2.2 billion rand. Stephen is on the line now, I hope. Stephen, I hope the line's a little bit better now. Maybe you could give us some details on this, this latest foray into the Australian market.
Sure. Can you hear me clearly, Lindsay?
Yeah, it's fine now. Please go ahead. Yeah.
Okay. What we've acquired a range of products from GSK, some well-known brands, almost a lot of them post-patent products like Augmentin, etc., from GSK for the Australian market, and it's really consistent with our strategy, which is one that worked well for us in South Africa, is to be a player across all segments of the market: generics, OTCs, branded products, and to try and get a decent market share and continue to grow off our strengths. So the advantages we really have is that we have a very big force now in Australia, a big team, so these products plug in easily enough. And so we're very comfortable that these are products that we can manage. We manage them in South Africa, and we feel we can manage them adequately in Australia as well.
I find it really interesting, Stephen, that Glaxo Smith Kine, I mean, if you read a report on the internet now, I'll just read you the first paragraph. It says, Glaxo Smith Kine advanced its clear out of non-core drugs on Wednesday with the deal that we've just spoken about. But their non-core drugs become your core drugs. What is your competency that you can turn something that's not no longer required by a GSK, a global giant, but is or can become core to you?
Correct. I mean, at the end of the day, life's about focus. And, when you've got a business that does 40 million pounds and you've got, or 30 million pounds, 30 billion rather, I apologize, this is very, very small in their life and nothing they're going to focus on, and they've got a very robust pipeline coming through. So this is not an area they would focus on. It's an area which requires, focus in areas like cost of goods, marketing, positioning of products in the market, competing with often generic players in that space. So probably not their core focus, but very much our core focus, and absolutely what is not material to them becomes quite material to ourselves.
Tell us about the financial effects of this particular deal, 2.2 billion rand at current exchange rates. How are you funding it, and what will be the financial effect immediately on Aspen Pharmacare?
So, if you look at the numbers we've given, you'll see there's a decline, half on half. So the funding at the moment, there's been a decline, in the numbers. Those numbers are declining for two reasons. One, Australia had some pretty draconian price cuts in the last period, which has affected all pharma companies. So we took that into account in valuing the assets. And the second area is that the largest brand in there is a brand called Valtrex, which has just come off patent. So there's some declines for that product. The effect on Aspen is, as we said in the announcement, we will have. It does have an effect on our earnings per share, and I think that we should continue sort of pretty much along that vein. We expect some declines in turnover, and then the turnover to stabilize, and hopefully we can reverse that trend into the future. We've borrowed money. We've had the money we've borrowed is from Standard, who's been our lead arranger in the past. They put the bridge in for us, so that's how we fund it at the moment.
You've done this so well over the years, and as I said in my introduction, the market loves your share price, up 40% odd so far this year. Are there more opportunities? You've got this incredible relationship with GSK. Are there more opportunities coming like this in other geographies or even with other companies?
I think there are. We look at many, many more opportunities in both other geographies and with other bigger multinational companies. I think we've got quite a nice offering. We're well positioned. As a company, the one thing that everyone comes back to us and tells us is that we really execute well. And so we're able to extract value where others might not, and we've proved to be quite a reliable partner in the regions where we're good at. No one wants to do a deal with us in the US or across broader Europe, but certainly in the geographies where we have a presence and are gaining a presence, there are a lot of people talking to us.
And just very finally, Stephen, any particular area, any particular country that you're targeting at the moment? We know about South America, we know about Australia, we know about a few others as well. But is there anything on your radar screen that is something that you consider to be a gap in your portfolio and that you're going to be concentrating on?
Yes, I mean, one of the other areas that I know you mentioned Australia, but it's a broader Asia. I mean, the Australian team have got a sort of set target that, Australia's got 20 million people, Asia's got billions, that we need to be balancing our turnovers across those geographies. So Asia is a very important part of the Aspen strategy. And the other areas we look for is really a differentiated pipeline, because we can get more products in and acquire more products that will give us presence in more geographies. We'd look to set up anywhere depending on where the opportunities are. We've got a model that sort of works for us at the moment, Lindsay.
Yeah, clearly you have. Thanks so much for your time this lunchtime. Sorry about the problems with the phone link earlier on. Stephen Sard is the CEO of Aspen Pharmacare, announcing the latest deal, 2.2 billion rand with Glaxo Smith Kine in Australia.